Hello everyone, today is Tuesday, October 29th, and this is our session, actually session number 8, not 7. Um, Today we're going to have a treat because today we're going to have a presentation by Teresa. Teresa is one of the content contributors that work with me on the weekly basis. She is, as um, some other content contributors that we have, either bloggers or just content contributors. She's behind the bias game, initial selection of the stocks that we look through and that we analyze. She's also behind some other project, and specifically, Teresa is in charge of our Twitter. So if you're on Twitter and you've seen like a big splash of activities in the last 6 months or so, that's Teresa's work. And for us, what's important with Twitter is just to develop educational tools, not just something that, we're just tweeting out stuff, but to have educational process on Twitter as well. And Bias Game works tremendously well there. Okay. So I'm excited about that. Teresa is going to talk about the process. And, I've just conducted the Trust the Process special in June, and feels, like it was yesterday. And I've have received so much feedback from you guys on that and how important it is and essential, how it is the last piece in your trading education, but also the only piece that you really need, just to build up the process. I'm currently building up the processes for different type of trading for some of the clients that I have, those are institutional clients, and my own processes, for different accounts. So it's going to be interesting to listen to Teresa, because as I was working with her on her process, I've realized this would be such a great segue for us and the bridge into the next assignment, which we will discuss next week more. But one of the homeworks for next week is going to be show us our process. So send me your emails, describe your process, and let's just go through that. And then as a homework, we could establish some of the elements of the process. I'll think about, what exactly. So we'll, practicum is always a little bit experimental just because you guys are more advanced with your knowledge, so we could do that type of stuff. So I'm extremely excited to have Teresa here and just to listen to her presentation and to see how she's going through the process. Then, as usual, we're going to do the bias game, anatomy of the trade. We have the new stock to look at, some Q&As, market update, and we have another exercise on the selection in non-correlated groups. In the announcements, November special is going to start next week. Yes, next week. We're starting on the 7th. And I definitely am looking forward to that, because what we've done with John in October special was more kind of like the next step to what I'm going to be doing in November. So in a way, it should be flip-flopped, but that's okay. John has done such a tremendous job explaining the basics of scanning, the basic of how you construct syntax, the logic as to why we would be thinking about certain things, and he gave us 5 or 6 scans that were discussed in the class, which was awesome. So for those of you guys who did not have a chance to attend, consider buying that those videos on demand, or attend the November special and then follow up with the October special. One way or another, that's going to be helpful. So what are we going to discuss in November? Momentum. such a huge piece of information that is visually very hard to find. Sometimes it's very obvious when the price moves very, very fast. But how do you recognize the momentum that, develops slowly, with when the price still has a lot of reactions, and so on and so forth. So that's going to be a very interesting material. It's going to be also intertwined together with the presence of institutions. We're going to be looking into how actually everything starts with the intent by institutions to get into this position, to start the absorption process. So once they made that intent clear, they are present in the market space and they are starting to buy. That creates the absorption that stops the price from moving further down. Because of that stopping action, that's when we start seeing momentum, which is the short-term momentum, start to flatten out. And these two concepts of volume as an institutional presence and what it does to the structure, which is reflected in the change of the momentum, that's the place that we want to concentrate on. Also, I'm going to show you a lot of tricks with the regular momentum indicators like rate of change, which is my favorite momentum indicator. And we'll compare those also with others. I'm not sure if I'm going to go deep into the comparison with RSI or MACD, but I think that we have to look into the PPI and just to see what's the value there. And you guys who are familiar probably already know the answer to that. And then we're also going to put all of that into the structure. So we're going to look into the structure from the perspective of specific momentum and volume signatures. We want to, these momentum and volume tools help us out to identify specific phases. So kind of like in-depth material, exactly the way how I like it. And I hope that the group is going to be such like we have here, kind of like inquisitive minds, speaking the same language, talking the same ideas, and exploring together. So that's the November special. All right, with this, let me find Teresa. Okay. Hi, Teresa, how you doing?
Hello, Roman. How are you? Hello, everybody.
Good. I'm changing the screen to you.
I'm very excited to be here.
Yes, I'm extremely pleased that you can make it, and thank you so much. I mean, because I know how difficult it is for you, Teresa, in Europe. So definitely a different time zone. So thank you for being here. And again, Teresa, just to reiterate, thank you for all of the Twitter bias games and all that stuff. It's a lot of fun, to create together and just to follow. And as you know, Practicum is all about the bias game as a homework. So everybody comments on that. Everybody loves that. So thank you.
No, thank you. Thank you for the introduction and for this opportunity about talking about the process, which is amazing. Hopefully in a short time, I have around 15 minutes, right? So I will be able to, it's 15 minutes that I have around that
Teresa,
time, right?
just go with this and, 15, 20 minutes and then some Q&A from the audience, and we'll see where it's going to take us.
Wonderful. So as I was thinking about what I was going to talk to you today, I thought, as I mentioned to you, Roman, that it would be a good idea to start by giving it a bit of context and explaining briefly what the process so far that I have developed has meant for me and the benefits that I have seen so far. So I have created a couple of slides before showing the main document, the pillar of what the process is for me right now, which is the Excel spreadsheet that I will show you in a bit. And so far, I can say that the process for me has come to bridge the gap between, on one side, the knowledge and the skill, the theory, and on the other side, the practice of the hands-on daily trading routine, the job as a trader. And that was the first realization once I started creating the structure of the process. Secondly, having that structure, developing that structure is increasing actually my self-awareness about my thinking. It pushes me to think about my decisions and why I made them in a way that I probably wouldn't have done if that structure was not created. Thirdly, and possibly this sounds a bit strange, but I'll try to explain, because I realized for me, this structure, the process of creating the process, if that makes sense, acts as a proxy accountability partner. What do I mean by that? When you have an accountability partner, you have to come to her or him and explain which milestones you have met at which particular times in order to meet the goals that you want to achieve and that you are committed to. For me, the spreadsheet that I'm going to show you is a sort of that accountability partner, because I have to do certain things, give certain inputs at certain times in order to be a bit closer to my goal of becoming the best trader I can be. And without that, I'm not any closer to my goal. So I hope you guys understand the analogy here, because for me, definitely it works this way, and I have experienced this since I started. And last but not least, the fact that I have started creating a structure around my trading, my decisions, is allowing me to draw conclusions. And these conclusions are about my tendencies and the mistakes I'm realizing that I'm making, and most of all, how to improve. Because one of the main things about all this is that the mistakes are always huge opportunities to learn and improve. And without that structure, I wouldn't have been able to spot those opportunities to improve. So the next thing we are going to move on to is the template of this Excel spreadsheet that I'm going to show you today. And this is the pillar of that is around which the development of my process is circling around right now. And it acts as a one-stop shop for all the key process steps, and that brings a lot of clarity to where I'm at right now and where I'm going. So in the document I'm going to show you, and the reason why I say it's one-stop shop for all the key steps, I have a tab for watch list, a tab for open trades management and very simple journaling, a tab for post analysis, which is critical, and variance, which I'm not really digging deep into at the moment, but I will in the future. And then I have personalized the template, adding a couple of tabs that for me right now are critical, which are the tab of the brainstorm about improvements in my process as a whole, not just this particular document, but my trading plan and the process as a whole, and the snapshot of where I am with the P&L tab. Obviously, the document I'm going to show you right now is not a finished product by any means, and probably will never be, and it's a constant work in progress. But hopefully we'll show you guys the benefits of having something similar, developing something similar, because for me, it's been a game changer. And I want, before I move on, I want to clarify that the templates I'm going to show you now are based on Roman's Trusted Process webinars templates, the ones that he gave during that webinar. So without further ado, let's move on to, just bear with me for a second. I'm going to find this. Okay, and hopefully I'll have the pointers so that you can see it clearly. So this is the document, and as you see, the first tab is the general watch list tab. Before I had 3 different tabs, and now I have decided to only use one. Why? Because one thing I have to mention is that I'm specializing at this point. I'm focusing in the universe of the FTSE 100 stocks, which means in practice that every single week I go through the same universe of stocks. So I realized that having a long-term, short-term, and waiting list for even longer-term candidates that are not yet ready was bringing a lot of noise and unnecessary struggle into the process. So I just decided to have a simple, very simple watch list tab. And in here, I put the candidates that during my visual analysis through stock charts, I realized that could be potential candidates to have a look at for entries during that following week. And if you see here, the way I differentiate which ones belong to the original short-term or swing trades or campaign candidates is just by setting a color. The ones in blue are the ones that before I used to put in the campaign watch list, and now in the general watch list I can just differentiate them by color. So having a simple list with this coding is working fine for me. And then I just give a status. So if there is any candidate that I like that week, but I don't feel is ready or is not going to be ready that week for either swing or campaign for that week, then I can just put a wait for me to be constantly having a look at it. And the ones that I watch more closely are because they are getting, more ready to move on, in my opinion. And then we have here, as in the template that Roman gave during the webinar, different elements about the structure, the relative performance, and institutional presence that you can see here, and that I have moved on into the other tabs. So I think we can move on to the next tab, which is the tab where I have any stock that at any given time I have traded. So this is a snapshot or the data warehouse of this document. So any stock that I have had a position, no matter how long or short, is in here. The ones obviously that appear in the status as closed is because they have already been closed, basically. And what this tab adds is the tactics. So because these stocks have already been traded, I would include here very critical information as the point of entry, the initial stop loss, the target, and then risk and reward, the ratio, and the size of my trade, plus some additional comments about the entry mostly. So once I have entered the information here and I have entered a trade, I would go on into this tab because this is the one that works as a mini journaling. And this is when I was referring to the accountability partner. I was mostly referring to this part because for me, it's a very binary situation. It's either every single day I come here and I do what I have to do and put the input of what I feel has happened with my dogs during that day, or I don't. Either I do what I'm supposed to or I don't. So either I get closer to my objective of becoming better or I don't. So in this tab, the main part is all the inputs that I do every single day that have to do mostly with the volume spread analysis, the movement of the price, and the movement of the stop losses that I indicate in a different color in red. And sometimes even my own personal comments about how I feel the trade might not be going in the same way I feel, and my stop loss might be hit sooner than I expected. Here, just to keep it smoother and to have everything in the main critical information in one place, as Roman suggested in his template, I maintain for every single stock the point of entry, stop loss, target, risk reward, and size, and the action, which is entering the stock. Once the stocks are the positions are closed, then I move on to the post analysis tab. And in this one, really, I bring on the same critical information that we saw at the beginning, plus all the information of mini journaling that I have been doing for every single day until the trade is finished and it hits my stop loss. And then that's when I move on to the main part of this tab, which is here, is the comments. And the comments have to do with how I feel the trade went. How did I manage it? Was my stop loss too tight? Did I move it correctly? Did I enter where I was supposed to? It's not very detailed, but detailed enough for me to always be able to come here in the future and know what I thought at the time, the lessons, and that's the most important part, the lessons that I thought this trade taught me. Because then with this information, I can go back to the charts and look at it in more detail and learn from my mistakes. So this part of the comments and lessons here in the post analysis is critical. In the original template, in Trust the Process, there is also a little section which is critical, and I haven't yet ventured into it because the way I'm building this structure is almost on layers. So I need to feel very comfortable with one aspect of what I'm working on so that it becomes second nature. It becomes part of my habits. And then I move on to doing the same thing with the next aspect in the process. So that's why I haven't yet ventured into this part. But basically, this is very, very, I think it will be very useful because there are different critical aspects of every single trade that we have to analyze: the bias, the timing, the very mysterious character with which the price moves, the point of, sorry, that was my alarm. Excuse me, the point of entry, initial, the stop loss, and exit. Obviously, by the time we analyze our trades, we know, post-analyze, we know how we did in every single one of this. And then we would be able to calculate a rate in percentage of variance of how many of these aspects did we do correctly, as opposed to the total number of the aspects that we need to ideally do perfectly well, which will give us the 100%. But anyway, I haven't yet ventured in this part. But I thought it was interesting to mention it. The two following tabs I included because I think they're very essential for me at the point in the development of my structure that I find myself in. So right now, I'm constantly questioning what I could do better. What is it that I need to change? What is it that isn't necessarily difficult? How can I smooth my process? How can I save time? How can I be more efficient in the whole process as a whole? And I write here the things that I think would improve the process as a whole and give the reason why at the time when I thought about it and the status. So for example, very recently I have added, well, I need to add a scanning into my process. How am I going to do it? I need to develop that, but definitely it's an improvement, and I think I need to be aware of it. And the same thing with changing my watch list or how I do the journaling. I started doing it in Word, and it was unnecessarily tedious, and I thought it makes more sense for me to bring that essential part into what I'm doing in this document and have the most critical information in this one-stop shop that I was talking about. Then things like how I annotate my stock charts, my charts in stock charts, I put it here as well. So this has to do with the process as a whole, but because this spreadsheet is such a pillar for what I'm building, I included it here. And then obviously the P&L right now, because for me right now it's very important to see what my tendencies are, what are my most common mistakes. I need to know where my trading is at this time. And the way I see this is it's a very simple personal warehouse of my trades, where I have very relevant information that is going to allow me to draw conclusions and dig deeper into what I need to improve. And here, for example, the conclusions I am focusing and seeing right now, what can I see about the way my trades are closing? Am I wrong too many times on the bias? Or am I stopped out because my stop loss is too tight? Am I not leaving enough wiggle room? So, and this can all be inferred sometimes from, all this quantitative information that we have been gathering. So for me, while this is very simple and I intend to build a lot more in it, already is proving to be very useful. I think I'm past my time, but I wouldn't want to finish without, well, reiterating how critical for me it has been to start creating this structure. And hopefully, though this has been a very short presentation, but hopefully I would have been able to communicate to you the benefits that for me it has had, and hopefully it will have the same benefits for you when you do it. And if you haven't done the Trusted Process webinar, I would finish by encouraging you to do so. If you have a process and you want to take your process to the next level, it will be very useful. And definitely, if you don't have a process, you need to build it, and that's the way to go. So, and I think probably I should leave it here, not to take too much time.
All right, Teresa. Well, fantastic presentation, first of all. Secondly, a very impressive P&L. Thank you for showing and sharing this.
Thank you.
So, I, as kind of like you were going through the process, two questions that I wanted to ask you. And feel free, guys, to leave any comments or questions for Teresa. This would be the time to do that. Two questions that I have, Teresa, is what are the most common mistakes that you have seen after you have built the process and started implementing it? And by common mistakes, I mean either analytical mistakes, excuse me, or executional mistakes. That's question number one. And then the question number two, in a more general sense, I know that you mentioned, quite a few benefits, but if you would take one benefit where you have seen just the progress, leaps and bounds, like beyond of anything that you've expected, what would that be?
Okay, so the first question, what I have noticed is that I seem to be quite good at respecting my stop losses. So it's never a situation where my tendencies make me want to not respect the stop losses or move them, giving myself too much wiggle room when if the trade goes against me or anything like that. Or I realized I'm quite methodical with that, and what I see is that when I'm right, many times I get stopped out before I should, possibly because of not leaving too much space, moving the stop loss and not leaving too much space for my winner to run. And I don't get stopped out on my initial stop loss. I mean, in these trades that had only happened of 17 4 times, I think, which is my losses are controlled, but I think my winners are not optimized. I think that is what I would say as a general conclusion.
When you say that your winners are not optimized, are you saying that you're not taking as much profit as the trend gives you?
Yes. Yes.
So you are getting out of the position earlier than you should.
Yes.
Okay.
Yes.
So let's kind of concentrate on this. I think this could be a little bit of a learning process here in the class, just kind of like to show what we would do in the private session, right? So the next question, obviously, here, guys, would be, well, how do we fix that? And how do we fix that using the process that you've already established? So if the goal is to figure out how to stay in winning positions longer, how would your process change in order to reflect that? That was the next step, by the way, Teresa, right? Because once you collect more information with more trades and with more data just going through the process multiple times, then the next step would be you see the problem, right? You identify the mistakes and then build in the process, the mechanism, the tools that would correct that mistake.
I would have to dig a little bit deeper into how to correct that that mistake.
Well, the
sometimes
reason,
yeah, sorry.
The reason why I'm talking about this, because I mentioned to you guys that I got really serious about the process, going into summer. I've hired actually a coach who has a degree in the process building. I mean, like literally a specialist on the process, how to build the process. And he was walking me through the whole thing. So one of the last things, on a higher level, then he was saying that uh, the process should be built in such way that would identify your mistakes very easily. You will kind of see either the commonality among the mistakes, and you will easily identify that common trait, or something that will be kind of like out of the norm, an outlier, some kind of behavior that you could see in the process. And the next step in the process is to obviously think about what that mistake is. So for instance, Teresa is saying, okay, I need some time to think about this. If we would quickly brainstorm this right now, Teresa, and I would say we would probably have to figure out we know what the mistake is, right? So not staying in the winning position for a long time. I think that we need some kind of analytical kind of base to why this happens, right? In those positions where you haven't stayed, what was the trigger that closed out the position, right? So
Sometimes it was,
uh
sorry.
maybe some
Sometimes it was,
observation that you make, right? So some technical trigger. What is it?
sometimes it has been an executional mistake because I entered a trade thinking, okay, this is a campaign trade. And then when I changed the stop loss, the minute I saw profits, I started moving the stop loss, but more as a swing.
As a swing stop
trade.
loss. Okay, so
Obviously,
now see how we are from just knowing what the mistake is. Now we're going into like, okay, well, there are some elements to this mistake. So what are those? I'm thinking my first intention is to have this as a campaign stock. Therefore, there is a lot of causality that I see. There is this and that, and then um, we switch to the swing. Probably we're seeing something that kind of triggers that behavior, Teresa.
possibly, and possibly also the mental aspect of it. I'm just brainstorming. Like I said, I need to
Right.
dig deeper. But the aspect of thinking, I'm already in profit, let me make sure
Yes.
I'm in profit. And it can be something unconscious. And that's why I'm saying, okay, this is
Yeah,
just
and I'm really grateful that you can discuss this with me right now in front of the class, because obviously when in the private session, we could dig a little bit deeper as to like psychologically what that is, and kind of speculate on that. Uh, so there is some kind of protectionism that turns on at that point.
possibly
Yeah.
just trying to find uh, a something that makes sense because obviously it's an executional mistake, if you want to call it, but very possibly also the source could just be something of a mental nature.
Could be,
Okay,
yeah. So I'm thinking maybe a kind of like another tab on dissecting those mistakes. So let me think about this, and we'll definitely.
And this is where self-awareness comes into play, where I was saying about the benefits, because all this is making me reassess my decisions and really think deeper, not just on the level of the execution or the analysis, but also from the point of view of the emotional aspect of it. So it's quite an enlightening process.
Right. Okay, well, guys, let me just see what kind of comments we have here or any questions that you guys have. Great workflow. Thank you, Teresa, for sharing this. Oh, this comes from Alessia. Um,
Oh, hi, Alessio.
Target analysis might be helpful. And you could definitely include the targets, and Teresa has the targets here. The risk reward is based on the targets as well. Um, that's good. We thank you too, Teresa. How much time do you invest in building in your process so far from France?
Oh, I started it slowly by the end of July. So I was not taking many trades. It was more about creating this structure, feeling comfortable with every single step that I was taking, and then building on that and making it a habit. So it's been bit by bit. But so far, I have been since doing this way since August. So it's quite recent, but a game changer. That was your second question, Roman. If
Hmm.
there was one thing
Yeah.
that
What is the global
uh,
change that it produced?
um, awareness of um, of my mistakes, but not just of my mistakes, of how I do things. To have a clear picture, because if you don't have a structure, it's very difficult to know what you're doing well, what you're not doing well. You don't really, you have an idea, it's a feeling, it's a perception, but you do not know. So this brings clarity, awareness. It's not a feeling, it's not a thought, it's knowing.
Right.
And I have always loved to have data and analyze the data to get to conclusions. So for me, this is awesome because now I don't have to rely on perceptions of what I think I'm doing right or wrong. I just draw conclusions. So
Well, this is terrific, Teresa. Thank you again, for this presentation.
no,
Um,
thank you. Pleasure.
and thank you for staying so late and presenting in the class. Um, some quick comment from Eric. I had a similar issue. The only way I could deal with uh, fear of being wrong after I'm in profit, fear of giving back profits, is to treat part of the position as a swing and take early profits and leave the main position alone and perhaps add to it later. Usually at the point I would get stopped out by moving my original stop loss too early. I think this is a sensible solution to
Yeah.
the kind of like that campaign swing. I kind of do that as well. Sometimes I start the campaign position, accumulate, and then I see where I'm in an extremely overbought condition, like that SunPower that guys we were going through. So on that buying climax, I was selling into that, and I was so excited selling that I sold literally almost all of my position, left just about 5% of it. Um, so you could definitely do that and then keep some, and then if this is a campaign, find another place to add to the position. So I really like that comment. um,
Thank you.
Eric is asking, when do you start selling this spreadsheet? Okay, well, the easiest way, Rick, to get this spreadsheet is probably just to take the June special, which is the Trust the Process. All of the spreadsheets
Absolutely.
are available to you, from that special. That's number one. But we could definitely, ask Teresa if there would be any opportunity to share maybe like a pro forma, a blank copy.
I'm more than happy. Yes, of course. I'm
Okay.
more than happy to share with anybody interested in,
Sounds great. I could post it on the class page.
Mhm. That's absolutely fine.
And another question here, and this is probably more for me. Could we crowdsource process information and create a master process? From Simon. So trust the process was kind of like that first step, to create this master process, and then to make it available to you guys for individualization. So meaning, doing something what Teresa has done. And Teresa has been working on this for a long time. I've been only partially involved in this, just kind of like, slightly overseeing, questions here and there, some sessions that we had. But as you could see, Teresa has taken what I call a performer and has created something of her own. And this is where the benefit comes, because a lot of these fields might be different for you guys, right? So you might create it in a different way. So as I've mentioned to you before, we are in the last stages of launching the new website. I'm kind of excited about this because we've been working on this for a long time. We cannot have all of the features that we want there. So after the launch, we're going to start working on some of the tools, trading tools. One of them is going to be the process itself. So we're basically going to take this type of the performer, and I kind of wanted to test it during this class, but I think that we're just going to introduce it in this class. We're going to talk about this. We're going to do maybe a couple of homeworks with this. But then starting from January, there's going to be 2 homeworks in the practical. There's going to be a bias game, and there's going to be a process game. And the process game is going to be just kind of like a class accountability, where you guys are going to do your homework like Teresa does. Like, I do the same thing. I have the same kind of spreadsheet right now, for especially for like something where you have a lot of decision making. You have to have that. So one of the thoughts that I have is to actually build it on the website, because I think it's going to be easier, and then you guys could store all of your journaling results, and we could put the charting in there as well, kind of like make it a complete package. How long it's going to take, I don't know. Probably 2020, just kind of like looking at how the website was going. But it's something very exciting. So it's something that I still feel that we're still developing as a community. So let's just work on this in the next semester and this semester too. And Teresa, this is just a great step for us, to start engaging ourselves in the process. So thank you again.
Great.
All
Happy
right.
to contribute.
I'm sorry, say again?
No, happy to contribute any way I can. I mean, I'm more than happy to share whatever I can to, for all of us to benefit.
Absolutely. And I think that let's keep in mind that, we could expand this presentation and maybe, to make it at a larger forum, maybe like a student forum type of thing. This is the next big conference for us on the agenda, something like that. I think it would be very valuable.
Yep.
All right. Well, a lot of thank yous, Teresa, from the guys, from the students.
I'm very pleased that they saw benefit in this. Thank you, guys.
Yes. Thank you so much, Teresa.
Thank you, Roman.
All right. All right, guys. That was a treat. Let me switch this screen. Okay. All right. You should be able to see my screen now. Let's see where was time. 4 o'clock. Okay, great. Let's start with the question. Okay, this question comes from Dimitri. What is the difference and how can we distinguish between bullish feathering action versus a not so bullish weak laborious rally? Example of what I'm trying to describe is the recent higher highs and higher lows on S&P with what seems like low diminishing volume. Kind of a little bit out of the context, but only because we know how the chart is, right, Dmitry? Obviously, we would want to see the whole structure because we want to see the lags that are coming before that. And looking at this reaction, kind of gauging as to what kind of supply we have and what's going on. And actually, in actuality, this is what we should be doing. And let's do it properly. So let me just put on the chart really quick. Here we are. And let's quickly revisit the definition of the feather. So with the feather, we want to have some kind of, sign of strength or significant rally. And then we want to have a dip reaction. And that dip reaction is going to be on increased supply signature. And here we would usually be thinking this is a trading range, like a backing up trading range. Well, if the volume signature is going to keep increasing, it would suggest some presence of the demand and absorption. If absorption happens really fast here, the next action by the price is going to be to come back to the resistance and then to rest for some time around that resistance and don't go down. That's an element of strength, that's an element of absorption. And instead of the trading range, we're actually getting this absorption pattern that has a very strong continuation. Well, let me kind of show you examples of this. Why am I saying kind of? Well, because this is going to be very interesting. And the first example is right in front of your eyes. You see it, guys? Where is it? If you see this type of absorption right in front of you on the screen, tell me. Again, we're looking for a very strong rally, supply coming in, absorption on the way up, and we're spending a lot of time horizontally. Dmitry is asking, right now? Well, yeah, here is this rally. It's just it's the same structure, it's just a different, time frame, right? So it's a huge structure. And we're seeing some kind of supply. Well, supply we're probably seeing more, like I want to say that we want to see supply somewhere here and that absorption, in the next rally. But on a much, much larger scale, look at how horizontally we're just spending the time after this huge momentum rally. So they bought in, CO bought in, and then no real supply, no real supply, no real supply, higher highs, higher lows, and such a condensed structure. What happens after the structure condenses? Obviously, expansion. And expansion probably in the bias of the previous institutional momentum, which was to the upside, not to the downside. So I'm expecting, quite a significant rally from here. Okay, another great example I love showing about this concept of how supply is being observed that way is an apple, and it happens on the sign of strength right here. And the reason why I remember this is because that was a mistake, a trading mistake that I made. So, after the analysis, it kind of installed in my head that, this could be one of those scenarios. So phase C, and then we have a sign of strength with the local climactic action, which goes into small distributional range. And then we see the increase in the volume signature and an increase in the supply. The price goes down, and that produces a change of character. And we instantly think this is a change of character for the backing up action trading range. Just because supply has increased a lot, we're thinking that there should be a retest of that, which comes later. But on the retest, supply is so low that we're realizing that, this was not just increase of the supply. That was also increase of the demand, and demand absorbed, a predominant portion of the supply. And with that, we are probably not going to go into a trading range. And if absorption is going to be successful and it's going to take some time, supply is going to be so low that the price will just drift up to the point of the resistance, and then we'll have a momentum breakout. In a way, that's what the price is doing right now in the bigger markets, right? Because the price is drifting up in the upsloping structure like it did in 1999 before the big run up in the technology. The weight on the news, still the tariffs, still the Brexit, still other, Fed as the big, kind of like known that is being expected to behave in a certain way. So therefore, we have a bullish bias, but we are waiting. And once that wait is over, oh boy, we're going to run away. And then if that falls into the first quarter, when the rally, actually is underway, think about the money managers. They're coming into the new year. 2019 is done for them. They could be in double digits for their P&L. But now they have to match that performance with the new year. And how could you do that? You have to quickly load up, or have the positions already in place, that are favorable for that type of advance. So there's going to be, there could be a potential buying spree in the first quarter. So here's that pattern: increase of the supply, and then feather, where supply and demand is diminishing. Supply has been observed, and then the next buying is going to be on the momentum up, on the breakout. How's it different from, let's say, the rally that has slow momentum or slow in momentum? Well, we could see it even from here. Here is your rate of change. This is 21 for a month. We could see how the trading structure, creates buying waves, right? So there is this first buying wave, second buying wave, third, and then, fourth, fifth, and we kind of see that with time, the momentum starts to fade. So for instance, in this instance, momentum is not overcoming the previous high. So we know that this rally is weak, and most likely we're going to have some kind of reaction. For instance, this part right here has the divergence. So we're kind of seeing that momentum is there, but not as strong as before. So we're expecting some kind of reaction from here. So those would be the kind of the moments where we would say that in this portion of the rally, there is a conclusion to the demand presence. This is the time when demand is starting, to go down and become of poor quality. And that would be the main difference between the feather and the rally that is moving, let's say, poorly. I think, Dmitry, I would insist on another question rather. So instead of thinking about the feather and a poor rally, I would be thinking about this in a slightly different way. I would be thinking about a poor rally, and I also would be thinking about low supply rally. Both are going to have the same character where supply is going to go down. Both are going to have the character of the price structure where the price will go up. In the poor rally, we usually will see intent to fall. We will usually not see the commitment. Whereas in the low supply rally, this is actually just an ease of movement. And with ease of movement, we always will have the picture where the volume is going lower. In our case, supply is lowering. And yet, the result is actually increasing and making commitments above. Why does this process happen? Okay, well, why does this process happen? Well, the main thing here to think about is that institutions are providing aggressive spots for absorption where they might have some increased liquidity, and they're coming in and picking up whatever supply is left. And because of volatility, they have a chance to pick up, significant portion of the available supply in the market at that time. They've done it here on the way down into the November, December as well. I mean, we see this from the volume signature, how it increased. So they bought in somewhere here. They were buying on the way up. I would say probably up to maybe like here, still high volume signature. And then this looks like the demand was not that great. And look at this portion of the rally. It's the least dynamic portion of the rally. So we know that, everything was done here. So momentum only kept us, somewhere up to here, up to this moment. This is where exactly in the November special, I'll show you this simple trick with the momentum. How to define where reaction is going to fall. You usually want to see where momentum, at least the big portion of it, the aggressive portion of it, ends. This basically will tell you that, this is where institutions started to say, okay, well, I'm at fair value. Why am I at fair value here? Well, because of this guy right here. This is where they thought that, this was the fair value, oversold, and then coming back. So what are they going to do at the fair value? They're going to start buying. They're going to say, we bought enough. There is enough momentum to carry the trend up. If the price comes back to this level, we're going to buy again. Price comes back, and they're buying again. Price comes back on more liquidity, provides them with more opportunity. They're absorbing this supply. Price creates another liquidity opportunity, which is smaller, and then it's easier to absorb again. So what is happening here is we are traveling up, and I would be predicting that unless we have some news, let's say we have news on tariffs or Brexit or Fed that are bullish news. On bullish news, we will have big bars. But then on other days, we're probably going to be traveling like this, at least in the first portion of the trend. I'm actually expecting that after the kind of like a global breakout, not localized breakouts for specific indices, but like whenever we are, let's say, maybe like 2% above, 3% above on the majority of the indices, the price is probably going to go like this. Just like small increments. And what this process is showing us, it's kind of like that, feathering up, but at the same time, what happens behind this process is that there is still absorption on the way up, and they are still buying. But they will be buying less and less because their positions are already so big. And non-availability of the supply that was observed here and then again, in different spots, it just creates that environment where the prices are going up. And as they go up, there is more pressure for money managers to be fully invested. I mean, the conversations that I have for 2020 with the institutional investors are basically oriented against around tactics. If the market is going to outperform significantly in the first portion of 2020, how are they going to match that? So it's a very interesting dilemma for them at this point of time. All right. Well, hopefully that was helpful. I don't know whether, Dmitry, I was answering directly your question. Dmitry's comment, I guess with all of the discussions about synchronicity of versus result, I'm trying to make sense of what to think. When there is not synchronicity, this explanation helped. I will rewatch it to solidify. I think, Dmitry, the main idea that I always tell students about the ease of movement or a poor rally or a feather is look at what the price is doing. Look at the actual commitment. Identify those points of resistance, not just on the local level, but a little bit on the more global, and see if that type of rally with poor qualities could overcome that resistance. And that would be probably 80% of the solution right there. Okay, great.